Hello, and welcome to another update video on Fetch.AI. So on this chart, obviously, we also had a strong decline into the lower support zone here for a B wave. Clearly, a break below the March low or the April low wasn't great and invalidated the idea that we could have started already the move to the upside towards this $6.20 area. One of our members asked me, what are upside targets for Fetch? I can tell you there isn't really a target. I just have a mathematical projection which hasn't changed. Yeah, it's still pointing to $6.20, but we need a local setup to confirm that. I mean, there was one, it just broke. Like the Friday event just broke it, right? Doesn't mean it can't happen anymore. It just means we need a new setup. We need a new we need some kind of upside momentum. I mean, to be honest, what happened here during the crash and the recovery, it's impossible to say, right? There isn't really much we can do with that, with this wick. I can tell you we have a rally and now sideways consolidation, which clearly doesn't confirm yet a major top. So, I mean, maybe we grind higher. What I want to see on this chart is a break above this green line at 48 cents. Why is this important? Because this is the candle, if I zoom in, this is the candle up there, yeah, which started late on Friday, where the selling volume kicked in. You see the volume indicator down here? I mean, it really started here at around 45 cents, but it actually, a little bit of volume came in the hour before that. So I want to get above that small swing high there. At the moment, really, in the short term, there isn't really much we can say about the current structure. The problem is also on different exchanges, different lows. So look at here, this was at around 12 cents on Binance. If we go to the Coinbase chart, it dropped all the way down to 25 cents. 25, it's way different, right? But to be honest, the structure isn't different on Coinbase because we also broke the April low. It would only be different had Coinbase had FET on the Coinbase chart found support above the April low, but that's not the case. So really, we don't need to distinguish between them at the moment here because structurally it does only make a small difference. But yeah, I mean, it's really important to confirm further upside momentum for the market to break above this line. There isn't really a microstructure I can assign here. It looks a little bit like a triangle that might be unfolding here. So I'm watching this maybe as a small, really hard to call it a bull flag, right? But it you know, maybe like a triangle, and if we get a break out to the upside, that could send us, well, first of all, to the top of the triangle around 43 cents, and then to round about 47.8, 47.9 cents. So I think it's worth watching this triangle, but we cannot really assign at the moment an Elliott wave structure here with the information we have. The next objective for the bulls would be a break above 47.8 cents. Until a clear microstructure emerges, it's best to focus on the bigger picture because patterns are here much clearer and we can still see further upside, especially as long as the Friday low is holding. That's the update on FET. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.